weekend all. Ira Epstein of Linn Associates with your weekend wrap-up of the agriculture markets for this Friday. And we are the 18th of October, 2019, and we're about 2:35 p.m. Central Time. So as we're here right now, this has been an interesting week. We're full-fledged into the harvest in many areas as we're talking. We're looking at the, if you will, the truce between the U.S. and China. We've seen that there's a 5-day truce that's going on in Turkey, but that really doesn't affect what's going on in the ag markets. And I can see the corn pressure coming down, questions about the soybeans, and the wheat market still getting a pretty good bump even today. Energy markets pretty flat, and natural gas getting a little bit of a rally today. So let's go to the monthly chart first, and that's what we do on the weekend edition. We look first at one monthly chart, and then the rest of the charts are going to be weekly charts so that we get a bigger picture of the market. And then on Monday through Thursday here in the wrap-ups, I do the daily charts with one weekly chart. But on this monthly area chart of closes, the important thing to me is that the market is over this 18-week moving average of closes. It had gotten over it for a brief period, if you'll take a look at the end of 2017, rolled back under it in 2018, and it's taken until just literally last month, September, for the market to get back over it. It's following through so far. Okay, that's good action. Support back at the 886 level, and on a monthly basis, we're well above that at 934. When we take a look at the weekly chart, something I pointed out last week, and I'm not altering. Some people might call this an inverted head and shoulder, with this being the head, a shoulder, another shoulder. And as the market moved out over this area, it's been able to continue its move to the upside. On the pattern, I look at that pattern, I'm going to put it back here, and then I put a swing line on it. And the swing line looks at a previous week to determine if the line drawn to it is down or up. I'm looking for patterns of higher highs, higher lows, lower highs, lower lows, or in some manner a higher high, lower low, which is no pattern at all. This has a bullish pattern, and it's had one for a while. It began back here, and it's got higher lows, higher highs. I filter it by looking at where the 18-week moving average of closes, and then one of the first resistance zones is the closest of a key moving average if it's over the market. It doesn't have to be. You can have it under it at different times. And the Bollinger Band. Well, at first, this market's 100-week average came in at 915.5. You worked through that. This was the week of October 11th. And now the 18th, while you're down 2 cents, you're still over that number. So on the way back down, wouldn't surprise me if it does fall that that's a support zone, but certainly this 18-week is a good one. Where's the Bollinger Band? The Bollinger Band are these black dashed lines. 95% of the time, the market will trade within this algorithm, and that's what it is. It's an algorithm designed to give you a theoretical resistance and support zone as I look at it. The market statistically will trade within that 95% of the time. So when the market first gets to it, one of the things I often tell people is, often, that's where the pros take money on the weekly and the daily charts, something that you look at. Now, the market hit that, it's gone through it, but support's back right at that area, the 100-week average, and in between the upper Bollinger Band. And then I look at momentum. Momentum is up. So what we have is a market that's in an uptrend, as defined by the swing line. The bias is up, as I define bias as being up or down in relation to the settlement price to the 18-week average of closes. It's over it, so the bias is up, and momentum is up. I do not look on momentum on the weekly chart as being overbought or oversold, just as a pointing up, down, or neutral. When I come to the meal market, higher lows, higher highs, uptrend. Bias up, the market's over the 18-week average. If it falls, that could be a support zone. Momentum up. Target, the potential of the upper Bollinger Band, which will fall when the market reopens on Sunday night. That's the way the math is made up of that. In soybean oil, this market's the strongest on the chart, of those three, but it is also the one that is now ahead of itself. It's over the upper Bollinger Band this week. You only stay 5% of the time over it. Last week, the market closed at 29.83, just under the Bollinger Band. So you're not getting the succession of close over, and over. Over, under, back over. That's okay. You're pushing that out, the momentum up, trend up. Support on pullbacks between it'll be down to the 100-day average, and probably with resistance if it gets there back at the upper Bollinger Band. Right now, the market thrusting to the upside. In the corn market, all we really did is when we got down to this big break area and just missed hitting that lower Bollinger Band, the market started up, and again, it stopped at the 100-week average. The next stopping zone, if it's going to continue a contra-trend rally. Why contra-trend? Because you've got lower highs, lower lows. Now, momentum at that point was still pointing down. Then the momentum right here started creeping to the upside. The market's still hanging at the 100-day average. If the market wants to rally more, then I'm going to look at the 18-week average as being a potential resistance zone. The market 2 weeks ago starts its move back up. I'm still looking at that 18-week average. Gets there, and now, as you can see, the market's hit it and pulled back, closing at 391. To negate the current downtrend, you have to take out 412. So all the market's done is had a downtrend, fell hard, came back, stopped at the 100-day, then the 18, and stalling. But you have divergence. You still have momentum pointing up, bias down, and trend down. When you look at the wheat market, this is in an uptrend. You have a market with higher lows, higher highs. It cleared, not here, but here. This is when the market turned bullish. This was the first week over the 18-week average. That means supports between that 18-week and the 100, and you break the trend if you get under 476. Look what the market did, fought in that zone. If it goes up, a potential could be up here with support still in that area. The market then this week moved up to that level. So still very much an uptrend. Cocoa market, higher lows. But now you've had this right here. Let's go to this week. This week was a week where you have an outside week up, and as long as that's not taken out, as it turns out, you've got the higher lows, higher highs, momentum up, bias up in the market. This is the support zone, but to get to it, you have to break the uptrend. So be a little cautious if you get down to that. You would break the pattern of higher lows, higher highs. In the sugar market, we came from the lower Bollinger Band area that we ran, shot up, stalled out, as you can see first, at the 18-week moving average of closes. If you clear that, then the 100-week, then the Bollinger Band become potential resistance points. Doesn't mean you have to go there, by the way. And you're stalling right at that 100-week average. And so often when you get over it, that becomes your first level of support. Second, the 18-week. The market is not trending. It has a lower low, higher high. It's spread out its Bollinger Bands, but it hasn't started a trend as I see it. Coffee market, a pretty big rally today. On the daily charts, I think you lost your embedded reading. I didn't check them, but I was looking at it intraday. Lower high, lower low. You did not get anywhere in challenging this low, which was a challenge here. It's possible you're going to get a bit more of a rally. We're getting all kinds of conflicting reports. Some of the suppliers to Starbucks are saying they're basically out of coffee now for this season. Others that I'm reading, they have plenty of coffee because last year's crop was so big. You're fighting these two elements. I see resistance at the 18-week average, but I don't see a trend on the longer-term chart. In the cotton market, you went up to a key resistance area this week. You got up to your upper Bollinger Band. Generally speaking, the first challenge of it, like you did here, like you do here, it's often an area where pros take some money off the table. All because that algorithm is designed to keep prices within it 95% of the time. I wouldn't be surprised if the market wants to see a pullback, support back here. If it rallies and it were to take off, well, the 100-week average is way up there, but staying over that Bollinger Band is not the easiest thing. In the cattle market, this is a vertical price rise. I mean, it's just a runaway. The market was down to 93.40. This week you hit 112.50. So you have to, if you're getting long up here, just think about it. You're buying about a 15 to 20% rally in prices without a correction. Not saying it can't go higher. If it does go higher, I've got two strong resistance points at the upper Bollinger Band and the 100-week average, with support back at the 18-week average of closes. In the hog market, will the hogs come alive with the talk of a U.S.-Chinese trade deal? Well, even though the hogs were sharply lower on the daily chart, for the week they were up 100 points. And this pattern is one of a lower low and a higher high. I don't have a trend, but I have a fighting zone between the 100-week average in green and the 18-week average right through here. So you put it together, it's a pretty interesting time in the market. You can see the stock market's still down, but that could be part of Boeing and some of the questions that are coming up with it. You know, one of the things I do each morning is I get up early. I've already read about Asia and Europe by 5:15 a.m. Central Time. I have a pretty good idea what's going on there. At that point, I'm probably already watching financial TV. I've already read Reuters, CNBC, Bloomberg, Fox. I've read all the important areas that I consider. Then I've read European newspapers and some Chinese. I don't read Chinese, but I read the American version. So I start you off in the morning, and these are for my subscribers. I start them off with technical analysis and fundamentals. And the reason is I want to bring you up to date if anything happened overnight, but the technical analysis is going to be off the chart work. And I'm going to talk buy here, sell there, here's the stop, here's where I'm wrong, lock in a profit if it does so and so. That's the way I'm going to talk to you, much more specific than you see me doing here. And the idea there is to give you your own confidence in the trades. And I'm going to cover all these markets every day in the same sequence in a way that there's a slide bar on the bottom of the video. All you do is pull it and it'll light up and tell you if you're on our website which area you're in. There's also, if you're there, a lexicon on the side, or you can just move around and you're going to see where it's at. Now, if you want to watch the whole video, of course you're welcome to do that. I mean, it's going to be about 20-25 minutes each morning. So imagine what I'm doing. I'm putting that all together in the prep work. There's a charge for it, and it's minor, $7.95. But I want to warn you on something. We are at the final phase by Monday, where I'm going to start doing a lot more special reports. Those special video reports, and I'm talking from the grains, the meats, and so on. I've been waiting to do this for a couple of months. They're going to come out, a lot of them. They're only going to be available for free on a limited basis to you, and then you've either got to be one of our clients that trade through us with a funded account, or you can have any of our subscriptions, and that will get you to them as well. I think you'll find that when I do those reports, monthly charts, often weekly charts, daily charts, seasonals, all put in there to give you a pretty good idea of what's going on. But every morning I'm starting off these videos for you, and you can get going for as little as 26 cents a day. Come on, where are you doing that? What are you getting for 26 cents a day? I don't think you can buy a stick of a pack of gum anymore. In any case, go to our website, www.iraepstein.com. Under the word research, you'll see morning subscriber video, and our other research is there as well. Take advantage. It's what keeps this going. And obviously, if you want my special reports, it's a way you're going to be able to get them. You can click here to get to that information as well if you're watching me on YouTube. You have a great weekend. I'll see you all Monday.